I want to welcome everyone for joining me today for tonight's presentation, how to day trade the New York Session Open. I will be revealing some of my trading secrets with you here tonight. Usually I don't talk about our strategy that much, and in fact, quite at all, because it is a proprietary trading strategy. And for those of you that have attended other webinars that we have presented in the past, we have a very transparent track record and we have a winning track record. So we're never down on the month. We're never down on the quarter. In fact, for the month of January and February, for the first 2 months of the year, we have doubled our account. So if you were trading, if you, let's say, had a $10,000 account, and if you were trading along with us, at the end of this 2 month period, you would have had $20,000, meaning $10,000 in gains and $10,000 from your starting capital. All right, so in tonight's presentation, I will share with you the many secrets many secrets that I use to trade the market, especially at the open. And I love to trade the open for many reasons. One of the major reasons why I love trading the New York Session Open, it's because it has an increased volatility, and it's actually the sweet spot between the London session and the New York session until 11 o'clock. For those of you that don't know me, I day trade futures and I swing trade stocks, and I day trade futures only from 9 o'clock in the morning until 11 o'clock in the morning. But that doesn't necessarily mean that I end my trading day at 11 o'clock in the morning. I set alerts throughout the day if there should be a setup or a pullback that should interest me. I step away from the computer because there's no use on watching every single tick in the market. And if I should get a pullback at the desired price that I wanted in accordance to our proprietary strategies that we use, then I consider another buy or a short in the market, for instance, like today. So I want to welcome again, everyone. My name is Anka Metcalf, and I'm going to be your host for the next hour. Before we continue, I just want to make sure that everybody reserves a couple of seconds to read our legal risk disclaimer. And basically what we're saying here is that all information from our seminars, webinars, etc., provided by Trade Out Loud are for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any other instrument of any kind. A little bit about myself for those of you that don't know me. Monica, the sound is cutting in and out. If you're running on a wireless device, the sound may be running in and out. Sound issues, sound issues. Like I said, if you're running off a wireless device, this might happen because the Webinato takes a lot of bandwidth. So make sure you are connected to sound is good here, good there. Okay, perfect. Okay. Thank you, Ricky. Okay, a little bit about myself. I see that there are a lot of new people in here, new traders in here. It's always nice to meet new traders, and I want to introduce myself. Okay, I'm a professional independent trader that is focused on equities, futures, and currencies for the last 14 years. Prior to becoming a professional independent trader, I come from investment background, which I spent about 11 and a half years. I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade equities and futures. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, chart correlation, a strict set of trading rules, and a 10-point scoring system that enables myself and my traders, my students obviously, to identify trades with ease. For those of you that want to stay in touch with me, this is the email where you can find me. And if you have questions that, yes, we have an office in Michigan and we have another office in Florida. So if you live in one of these two areas, more than happy to meet you. Okay, so my email is info@tradeoutloud.com. If you should not hear your question answered in tonight's presentation, more than happy to answer your questions via email. You can also find a lot about us on Facebook, also on Twitter, on YouTube, and on LinkedIn. And we have been in business since January 2011. Here's our agenda for today, and here's what I have prepared for you today. So today it's going to be a very informative webinar. It's not going to be one of those fluff kind of events where you or high sales pitch. This is something that you can apply to your trading as soon as tomorrow morning for your trading session. And not only that, but let's not forget that the futures market is close to a 24-hour market. And you can apply these strategies as soon as after the presentation, and we're going to look at the markets together, okay? Because the markets are relatively very active at this time of night, and they were very active overnight last night. Starting with about 6:45, they started to move. Okay, here's our agenda for today: how to correctly perform a pre-market analysis, and this is a winning system that you need to apply each and every single time. I'm going to share with you the secrets of how I look at the market and how I analyze the market. Look at the market as a global. Look at the market through the eyes of synchronicity. Also, how to select the trade of the day for better odds. Okay, now I know that in futures you don't have a lot of selection. I literally only have 9 charts that I look at on a day-to-day basis for my day trading purposes. And for my swing trading purposes, I look at other charts, but we're here to talk about day trading and about the New York Session Open. And that's a topic for another discussion. But I will share with you basically the 9 charts that I'm watching on a day-to-day basis, and let's say on a minute-to-minute basis as we're approaching the New York Session Open. I'm also going to share with you how to plan and execute your trade, because this is a very important step of the process. Also, how to respect your trading plan and the discipline that you need to have to implement. And once you get into a trade, and not even that, but before you even get into a trade, there are some steps that you need to take. Also, how to read the market conditions and how to adjust that to your trading. This is a very important step. And right now we're coming from the FOMC announcement. The FOMC press conference was at 2:30. They have decided to raise the rates, which happened, and the markets just pushed very, very sharp to the upside. How do you adjust your trading? How do you adjust your trading? How was your trading day today? And how did you adjust your trading with the FOMC announcement? Did you trade the FOMC announcement? Are you still bullish following the FOMC announcement? Do you think we're going to get a pullback? What other catalysts do you think we have that can potentially move the market higher, make it base, or actually pull it back? So these are some of the things that I'm going to touch upon today, because you know, trading and reading a chart is one part of the equation. The other part of the equation is, what is the environment? What's going on? I mean, I think that most of the traders think that, okay, so we have FOMC out of the picture right now, so we're actually into the clear. Well, that couldn't be any more wrong, because in reality, we do have a bunch of economic releases that are coming out tomorrow, pre-market at 8:30, so before the New York Session opens. And we also have a lot of economic events that are coming into the market at 8:30 a.m. Eastern time on Friday. So that is a very, very important chunk of information that is coming then. And not only that, but think about option expiration that is on Friday. And I don't know if you guys know here, I don't know if you guys know, but that has a lot to say about the market. And then again, how's your trading plan going to be for Monday? So you see that reading the charts and just performing, you know, a chart analysis is not enough, and it's not conducive to a good analysis on how to select price, how to select your entries, and how to actually determine what to trade on that specific day. For instance, tomorrow, let's take for instance on Thursday, you're a futures trader. Maybe you should decide to trade natural gas. Well, do you plan on trading natural gas right off the open? That would not be right. Why? Because each Thursday at 10 o'clock, around 10 o'clock, is it 10 or 10:30, Ricky? I keep on forgetting. We have gas numbers that are coming out, natural gas numbers that are coming out. So therefore, you should apply some discipline, and actually, you should really not even attempt to play natural gas ahead of the numbers, ahead of the announcement, because that is going to be extremely difficult. 10:30. Hey, David, thanks so much. Okay, just talking here and talking, and I lose my train of thought. It's like, okay, is it 10? Is it 10:30? Okay, no, 10 o'clock reversal time, right? 10:30 is is oil numbers on Wednesday, and also gas numbers on Thursday. Thanks, David. All right, so we will talk about these market conditions as well. Also, live market analysis for major future indices. We're going to perform live market analysis, and I'm going to give you my take on the market and what I see on the market and what I see happening at least in the next few days in the market, if we don't get any kind of influence from other market influencers, such as economic releases. Okay, so let's talk now, because like I said, we have a jam-packed session tonight. So let's talk a little bit about pre-market analysis checklist. So what do you do? First off, I'm one of those kind of lazy traders, and I like to sleep in. I'm not a morning person, and for that reason, fortunately, I live on Eastern Standard Time, and I don't have to worry. I don't have to worry about waking up very early, and that was never in my habit. But here's the thing, I wake up at around 8 o'clock, and by 9 o'clock I get everything all ready, and I sit at the computer at maybe 5 to 9 or something like that. And I start doing my pre-market analysis, my pre-market game plan. And what I do, I establish a plan for the open. You cannot establish a plan for the open unless you get very close to the open. And I think that 30 minutes before the open is more than enough. Most of the time, things tend to calm down before the open a little bit, so the volatility just decreases a little bit. Because all the London session traders are just waiting for the first ticks and the first reaction that will happen at the open. So therefore, it's very important for you to come in front of the computer. So if your plan, let's say, is to trade the oil pit opens electronic trade. The New York session actually opens at 9 a.m. Eastern time. So what that happens, that if you are one of those traders that only trades oil, or only loves to trade oil and is very focused on trading oil, then you should be in front of the computer at least 15 minutes earlier, so you perform your pre-market analysis on oil, your extended hour analysis on oil, and see what's in store and what should happen to oil at the open, and have your game plan ready ahead of the market open. When I take my trades and when I execute my trades, I always have a plan for my trades, at least my entries, my stops, and my targets are set at least 5 to 2 minutes before they trigger. So I do have this pre-market game plan that is a general vision about analyzing the trend, analyzing major support resistance levels. When I'm talking about major support resistance levels, I'm keeping in mind the 7 layers of support resistance levels, because if you're only talking about support resistance at supply and demand, that's only 10% of the equation. The other 90% are those other 6 layers of support resistance that are in existence and that play a key role, especially when trading futures. Trading futures is a highly traded trading asset, because a lot of high frequency trading computers are trading it. For those of you that have been trading the stock market, for those of you that have been trading the futures market for a while, know that they respond to specific levels. There are specific price levels at which they react, especially when you're trading oil, especially when you're trading the mini Dow. especially if you're a stock trader or ETF trader, and if you're trading ETFs. Okay, so you know that they respond to certain areas and they respond at certain times in the market. Okay, they don't trigger at random times. They trigger at more likely at very, very precise times. And I had a webinar last night, and I've mentioned what those precise timings are, precise times throughout the day are, and that's when they trigger. If they don't line up at a specific price and at the specific time that I know that these HFTs are going to trigger, I don't have interest in that specific trade, because what that means is that it's the simple fact that I'm not going to get the follow through that I need, and I might get in a trade that would be like watching paint dry. Stefan, yes, Fibonacci's are one of the 7 layers of support resistance, and they're super, super important to follow, especially when you have price that is running at all-time highs, or price that is dropping the way oil has dropped throughout the last 5 or 6 trading sessions. It is imperative for you to know what are the correction levels, what are the extension levels on those. Hi, Samuel. Okay. The other thing that we need to do, and I'm going to bring some charts up in a second, is performing a top-down analysis of the instrument that you're trading. So once you select what you are going to trade, and this applies to stocks as well, guys. So if there are a lot of you in here that are only stock traders, oh my gosh, you're in for a real treat, because this applies to stocks and ETFs as well. So this is the same analysis and the same principles you apply to your stock trading or your ETF trading before the open. Because what are these indices, and what are these futures indices that I'm referring to tonight? Well, they're nothing else than the E-mini Dow, the E-mini NASDAQ, the E-mini S&P 500, and the E-mini Russell, right? So when you're talking about the market, it's the same market, okay? So it's very important to have a very good platform layout whenever you do that, okay? It's very important for you to have a good platform layout. Just remember, guys, I'm not here to talk about platforms or brokers, and I'm not endorsing any kind of broker out there. But what I'm telling you and what I share with you tonight is very important. Remember, if trading is your business, invest in real estate, and real estate in terms of trading means nothing else than having good monitors and having enough space on your trading workstation so you can see the charts. When you're trading, you shouldn't toggle between charts. You shouldn't have to move charts around. You should just focus on your screen and your symbol, the one that you have typed in. There is no moving around with charts, okay? You just focus on one button on your mouse, or if you're using hotkeys, you can use hotkeys if you wish. And I used to use hotkeys a lot, and now I kind of stepped away from hotkeys because I'm not trading as much, as I'm not a compulsive trader. I'm not a scalper, and for that reason, I really don't need to use the hotkeys anymore. And just a click of a mouse when I buy, a click of a mouse when I put a stop order in, and other than that, it's just like watching my trade develop. It's like watching it on autopilot. Okay. So I'm going to be sharing with you tonight how to perform a top-down analysis of the instrument that you're trading. Other than that, first of all, after that, you should perform. So after you look at the charts, you have to perform your overall bias, determining the trend, determining the bias, determining your key support resistance areas that are throughout the chart, determining the price levels at which they are trading. And also, based on that information that you gather, you have to determine whether you want to purchase, you want to buy, you want to enter a specific symbol at a specific price, and what your stop is and what your targets are. Because when the market opens, guess what? It's going to open and everything's going to happen very fast. Remember, we're trading the sweet spot And the sweet spot is that overlap of the London session and the New York session. Okay, so things happen very, very fast. And if you don't have your homework done, you would have to wait for a pullback. I really don't like to trade after 11 o'clock because the volume decreases dramatically. We're entering the doldrum period, and that is the toughest period to trade. Okay, it is the toughest period to trade. You have to have wider stops because support resistance levels on minor time frames are often tested. You get flurries down, you get shakeouts if you're watching some bases. So in order to stay on the safe side, if you're, let's say, a full-time trader, and if you should choose to trade throughout the whole trading day, you should decide on what hours you need to trade. So the best hours to trade futures are literally, if you're trading the future indices, are from 9:30 a.m. Eastern time until 11 or 11:30 a.m. Eastern time. So these are the 2 hours that you need to put your maximum attention. Your maximum attention needs to be drawn at this specific times, and also take a break from 11 o'clock to about 1 o'clock and be in front of the computer at 1:15, because that's when the magic starts happening again. 1:15 until 4:15, that's the last big chunk, big section, big module of trading that is happening in the market. Traders are coming from their lunch breaks, they're coming to their trading desks, and I'm talking about institutional traders. I'm not talking about the retail traders. I'm talking about institutional traders. I'm talking about hedge funds. I'm talking about all these traders that are out there that put on massive orders in. I'm talking about high frequency trading computers as well. Those are the times when they become active again towards the end of the day. All right, and again, we're here to talk about minis. Yes, minis. Okay, so the other thing is that you have to determine your risk, and we're going to talk extensively in tonight's presentation about the entry to stop, the target, and how to determine your risk. Determining your risk is very important, and also determining your risk is very important for you in order to determine your position size, and also determining if that is a trade that fits your risk tolerance, or if you're going to skip it altogether. You may find yourself, and this was very common last year, that you have amazing setups that happen in the market, but you can't take them. And why? Because the risk is too high. And if the risk is too high, guess what? You're not going to take the trade. And you have to discipline yourself in such a manner for you not to take that trade. Last but not least, position sizing. Position sizing is key. I have a couple of slides ready for you tonight to talk about position sizing, and this is literally in correlation with your risk tolerance. And you must always have the same position size, the same risk on every single trade, and position size to that according to your current risk tolerance, in order for you to have a consistent trading system. Herman, that's a great question. Herman is asking, why not start trading at 8:30 a.m. Eastern time? The reason why I don't start at 8:30 a.m. Eastern time is because that is the precise time when a lot of economic releases are coming out, and I don't trade economic releases. That you never know how the market will react. Good news, the market might go down. Bad news, the market might go up, or good news, the market might go up, or bad news, the market might go down. So there's no way on interpreting which way the market is going to go. 8:30 is actually one of the worst times where you can start your trading, because that is the time when all the economic releases are coming out, whether it is job numbers, unemployment numbers, etc., PMIs, you name it. That is the worst time to be active in the market, and especially in the futures market. And especially when you're dealing with indices. Oh, if you're trading wheat, okay, that has nothing to do with the market, and you have no correlation with the market, yeah, you can trade wheat or corn or lean hogs or whatever it is. But if you're trading bonds or e-minis, you better believe that that's going to have a big say in the market. The problem with trading at 8:30 a.m. in the morning is that you have your entry, you set your stop, And if you're lucky and the trade goes your way, that's fine. But if you're not as lucky and if the trade goes in the other direction, you're going to get stopped out. So your odds of stopping out, of taking the trade at 8:30 a.m. Eastern time and stopping out are very, very, very high. I do your pre before. Do you do I do you're trying to ask me if I do any pre-market trading? If I do any pre-market trading? If I trade before 8:30 a.m. Eastern time? I don't. And that's a personal preference. You may, you may trade before 8:30, but my method is based on trading the New York Session Open, and that's because I'm a little bit of a lazy trader. But the methods that I teach, you can trade throughout the day. You can trade in the Asian session. You can trade into the London session. You can trade it anywhere. Harshad, try to log out and log back in. Rick, if you can help Harshad, he lost sound. Okay, get in touch with him. Make sure you type it in the room. Okay, so close to 9:30 Eastern time, watch your plan fall into place. So there's little for you to do at 9:30. So you're very calm. You have a plan in place, and that's what most of my traders do. They trade emotionless. You know, guess what? When you're trading with money, money being the most precious commodity that is in the world, you get emotional because your capital is at risk. Your capital is out there. Okay. So when you have a plan, and when you have a plan that tells you exactly when to enter the trades, that tells you exactly at what time you need to be in front of the computer, that tells you exactly where to place stops, that tells you exactly how to manage trades, because that's a big part of the equation. How do you manage your trades? And I have prepared some slides today in regards to this subject. So that is a very sensitive matter. How do you trail your trade? Okay, so it's one thing, like, you know, if you have a losing trade, you know, that's part of the plan. So you lose in a trade. You have it have hit your stop, you're out of the game, right? But what happens if the trade starts going your way? Okay, and you see that you had, let's say, 1 or 2 or 5 targets in mind. The E-mini, let's say, goes to your target 1. What's your plan then? What do you do then? What do you do then? Do you have a plan? So ask yourself. This is a thing that, you know, you could write it down on a piece of paper tonight. What is my trading plan, and what does my plan say that I do when an E-mini reaches target 1? What does my plan say, and what does my plan tell me to do when the E-mini reaches target 2, or when the E-mini reaches target 3, or any commodity that you may trade? Okay, do you have a plan for that? Do you have a damage control plan? Let's say you forgot to place in a stop. It's common. Okay, it's common. If you're in, let's say, more than 2 or 3 trades, let's say, I don't know, maybe you're a stock trader, you get in some stocks and you get in some futures trades as well, or you get in 2 futures trades. Things start moving very, very fast and you forget to place a stop. Okay, it's not as uncommon as you may think. Okay, so you forget to place a stop. Do you have a damage plan in place? Or you just take yourself out of the trade. You go like, oh, I forgot to place the stop. I'm taking myself out. I'm down. Oh my God, I'm down. What do I do? I'm taking myself out. No, that shouldn't be the case. You have to have a damage control plan in place for that situation as well. It's not like you take yourself out of the trade. You have to know how to go back on the chart, reanalyze everything in order for you to place a different stop. Okay, so to fix your problem, not take yourself out of the trade, but try to fix your problem. Okay, now that you have everything there in place, it's time to hit the autopilot. All right, pre-market analysis is, like I've mentioned before, I am going to share with you how to perform a top-down analysis and how to do your pre-market analysis. Okay, so for that reason, I'm going to bring today's charts. Okay, these are live charts. You can see them right here. I have highlighted areas. The 1 hour chart, the 1 hour, the daily, the weekly, and the monthly chart all have pre-market data. The only charts that don't have pre-market data are these minor time frames, which don't interest me at this point in time. Okay, so because they are, let's say we're doing this pre-market game plan at 9 o'clock in the morning, and I really am not interested in a little setup that happens off the 2-minute chart or the 1-minute chart. Okay, I'm really not interested. So for that reason, when I start my pre-market game plan, and you can see here, this is my layout. This is one of my screens that I watch, and I know I've received 2 private messages that if I can share my screens, this is one screen that I'm sharing. Um, um, this is one of the screens that I'm sharing right. This is my home screen that I'm sharing right now. It's one of my screens that I have on my monitor. And another question, I'm going to answer another question. How many monitors do you need to trade futures? You need 3 monitors, and there's no question about it. You need 1 monitor for this screen that I'm sharing with you right now. You need another monitor that will display your DOM or your order entry panel, and also the chart that you're trading, the minor time frame, because you're a day trader. Obviously, we're here to find out clues on how to trade the New York session open. And then another monitor will display your watch list. And I'm going to share my watch list with you. And guess what, guys? It's not going to be a list. Okay? It has nothing to do with a list. It's rather than watch charts. Okay? I've invented a new term, watch charts. Okay? Versus a watch list, because it's not a list. It's basically they're basically charts. Okay? So Zarir, of course I'm going to share CL with you. We actually have a swing trade in CL that we have just initiated. Okay. All right. So here's what I want you guys to do as as soon as tonight's presentation ends. And as soon as tomorrow morning, if you should trade the New York Session Open. I understand there are a lot of you in here that are from Australia. Oh my God, I just seen the chart a little bit earlier. South Africa, North America, Canada, Venezuela. Oh my gosh, Australia. Type it in here if I don't mention your region. Hi Samuel, I saw you there in Australia. Okay. Singapore here. United Arab Emirates is here. Italy, Spain, Germany. Okay. Okay, Jamaica. Awesome. Okay, Tennessee. Perfect. All right, a lot of you guys obviously are here from in the United States. All right, a lot of you guys obviously are here from in the United States. Dominican Republic, Brasilia, we should all go. Okay, I'm in Michigan right now, and I could really use some sun. Okay, I could really use some sun right now. All right, so India, awesome. Okay, thanks, guys. All right, so here's the thing, guys. You have to start with a top-down analysis. When you were watching and this is my home screen, remember all these charts are linked, and when I change the symbol, you could take a look right here. Let's say we want to look at the S&P 500 E-mini. I want to see all my time frames because this is very important for chart correlation. Remember, I'm not going to go ahead and short S&P 500 just because the daily chart is into an uptrend, and the daily chart just triggered a daily buy. So for that reason, I'm going to look for pullbacks to go long. Okay. Hi, Windsor, Ontario. We're like, I am literally like 30 minutes away from Canada here. 30 minutes away, I'm from Windsor, Canada. Okay. Awesome. Okay. All right, so you're feeling the cold, right? Brutal here. Wind chill. It's horrible. 16 degrees. I think they were like 16 degrees last night. I can't wait. I can't wait. I can't wait to move to Florida. I know. Okay, so guys, start with the top-down analysis on these charts. Start with the highest time frame. These time frames are going to keep you on the right side of the trade. Knowing how to be on the right side of the trade is imperative. Okay, it's imperative. So if you have a very strong uptrend on all these time frames that are here at the bottom, guess what? all these little time frames that you see here at the top, from 1 minute, 2 minute, 5 minute, and 15 minute, guess what, guys? Even if you have a turnaround on these minor time frames, you are not going to go short, period. This is the number one rule. When you have a strong uptrend on these major time frames, you never go short. You wait for the pullback to go long, not even for a scalp. Not even for a scalp. And why is that? Because you're not going to have a measured move. You don't know how steep or shallow the pullback is going to be. Okay? You don't know how that is going to react. So for that reason, shorting is not an option. For those of you in here that know me through my videos on YouTube, you know that I used to do the pre-market game plan. Now it's part of my my service, my signal service. But I sometimes, you know, when I feel the need that the market is difficult, I put it out there for all the traders to benefit from it, because I know how important it is to be at least someone to confirm to you that you're on the right side of the trade. So that's one of the reasons why I put out my my recordings in the morning on YouTube. So that's very, very important as well. All right, for you to know which way the market is going to go. Obviously, we had the FOMC, we had a trigger on the daily chart, and we're poised to continue higher all the way into this prior all-time high here at 2401. Okay, this is one of the numbers that is very important for our trading. Okay, so okay, the rear uptrends can be interpreted differently. What do you mean by uptrend? No, there's only one interpretation for an uptrend. Okay, an uptrend is actually when you have a series of higher highs and higher lows. A reverse in the trend is read by having a top. Write this down, guys, because I'm not going to repeat it twice. A reversal in trend and a confirmation of a reversal in trend can be read if on a major time frame, specifically on the 1 hour or even on the daily chart, you have a top and you have at least two lower lows and lower highs. That's when that's a confirmed reversal. Okay, other than that, if I don't have my confirmed reversal, I'm not going to go short. I'm going to wait and buy every pullback. And guess what, guys? I have been right since the market turned around. Okay, since the market turned around and it started power trending since 2013. And everybody out there said short, short, short. Oh, Dow is never going to reach 18,000. Dow is never going to reach 20,000. Dow is never going to reach 21,000. Guess what, guys? I was always on the right side of the trade for so many years. And because I applied this methodology for myself, I love to teach it to my students as well, obviously, because I want them to make money. Okay, I want them to make money, and my students are making a killing at it. Okay, all right, so top-down analysis, you start with a major time frame, and you always, when you analyze your trading, you're always looking to see where is price trading in correlation in relation to support resistance. Those 7 layers of support resistance. So where is the price at all times? Okay, where's the price located at all times? A good indication, and you're going to see my pre-market analysis, I'm always referring to the hourly chart. The hourly chart is going to be my battleground. It's going to be my battleground for my pre-market game plan. So guess what? I never take a trade off the 1 minute chart. And yes, I trade the 1 minute chart. I trade the 2 minute charts right off the open. But I never take a trade off these 2 time frames without consulting with my hourly time frame that is going to give me the right bias for the trade. Because guess what? If the hourly trend tells me that it's pointing higher, that if the hourly chart is pointing higher, guess what? I'm not going to take a short on these 2 small time frames, not even for a scalp. Not interested. I'm interested in scalps with high directional bias and high odds, because if I risk my capital, I want to risk my capital and get at least 2 to 3 times my reward limit. Okay. So with that being said about market analysis and how to perform the market analysis. And like I've mentioned, okay, so now we should go a little bit into all of them, okay? And let's say I'm going to give you my take, okay, my take of what's going to happen moving forward, okay? So I get all this information from my hourly chart. Obviously, we're in a very strong trend. We have just triggered the daily buy with the possibility of continuation into 2400 for an all-time high. We also have further targets into 2445, 2475. So even higher, we have projections for higher. We have a tool that we use to analyze that. And therefore, knowing my directional buys from these major time frames, you can see that I'm using some moving averages here. Moving averages are fanning out. That is a sign that the trend is still going to keep on going. All right, then I move to my hourly chart. That's going to give me the bias, hour by hour, what's going to happen, the trigger, the stop, the parameters, the pullbacks. This is my guide for taking trades on the 1 minute chart and the 2 minute chart. Also, when I look on the hourly chart, I look at to see exactly where the price is located, but not only that, I see where the what price level the at what specific price that this mini or commodity, if I'm looking at commodity, is trading. Okay, so I love to see that. So all in all, I'm gonna want to maximize this sell for you guys to see exactly what I'm doing. Okay, you can see my high. And remember, when you're analyzing charts, you better make sure that you have enough information on your chart so you can see and analyze what has happened in the last at least 5 or 6 trading sessions ago. Because you're going to see highs, you're going to see lows, and you're going to read behind the candlesticks. You're going to read the psychology behind the candlesticks. You're going to read fear. You're going to read fear, greed, and also you're going to be able to read the fact that some of the traders, some of the institutional traders may not be committed to the long side or to the downside. A very good indication that we were not selling off ahead of FOMC was the fact that heavy investors were not letting go of their contracts. Were not letting go of their positions. They were not even easing out. The only easing out that happened was the HFTs, and the HFTs were the ones that drew the price into a support area of 2354. This was the triple bottom that was tested once here, twice here, and 3 times here. This was the triple bottom that happened in about 3 trading sessions, okay? Not consecutive trading sessions, but happened in 3 trading sessions within the same week, okay? Within the same week. We bottomed out and we started to raise, and overnight, we started to move a little bit higher. For those of you that are thinking, it's like, oh, you know what? I don't have time to trade the New York session open, but I have a full-time job. What am I going to do? Well, guess what, guys? Look at the active, and actually one of my personal favorites is to look at the market after it opens at 6 o'clock. I'm not going to trade from 6 o'clock to 7 o'clock, obviously, because that doesn't have a lot of volume, but I love to see what it's doing. And the trading is so calm, and you don't have big bars, you don't have big volatility. It's just place your stop, place your entry, place your stop, let it trade, place a profit target, and you're out to dinner, okay? You can take your cell phone with you, set a couple of alerts, to notify you when you have reached a target or when you're close to a target, and let it trade, okay? Let it trade. Exactly. You can move to the West Coast and you can be done with trading before you even get to work, because guess what, guys? Don't tell me you don't have time from 6:30 in the morning until 8:30 in the morning. I trade from, like I said, I trade from 9 to 11, and then I'm done. I'm walking away. Okay. So this is pretty much the schedule. Okay. And it's called part-time. It's called full-time trading with basically trading only part-time, but it's full-time trading, because guess what? Those 2 hours, I'm in the zone. I don't care about the phone that is ringing. I don't care about anything else that is going on around me. Literally, there could be like a big hurricane happening or a tornado or anything. I don't care. I don't care. I'm dedicated to my trading, because guess what? That's where my money's coming from. That's where I'm earning my living. Okay, so you better be dedicated 100% to your trading when you're trading. If you start losing interest, walk away. Because after 2 hours, odds are that you're not going to be very focused to your trading and you're going to be walking away. You're going to be walking away, or if that shouldn't happen, you're going to find yourself on the internet browsing, looking at Facebook, seeing what your friends are doing, what emails you're getting. Keith, trading the Asian session or the London session? We were just talking about trading the Asian session. I love it. I love it. Look at this beautiful move up. Honestly, this was a beautiful move up. You can see support here at 62, and the trigger that came at 64 and change, 64 and a half. Okay, 2.5 point stop here. Look at the reward. Beautiful trailing, by the way. No headaches. So if this actually is starting to happen at 9 p.m. Eastern time. 9 p.m. Eastern time is 6 p.m. Eastern time in California on the West Coast. Okay. Peter, about 10 days or so. About 10 days or so. Okay. So here's the thing. You had a beautiful run, beautiful, and your stop would have held even at the London session open. Okay, London session open came higher, testing the prior high, moving back lower, consolidating here, consolidating the base, reaffirming that the price is not ready to go lower, and then breaking out at the New York Open. Okay, breaking out at the New York Open, and here things became very, very choppy around 1 o'clock, which is very normal, right? Day traders easing out of their positions ahead of the FOMC meeting, and then blast off. Do you think on this bar, do you think there were traders? No. These are high frequency trading computers right here trading. Okay. Okay. What we have right here is we've created a peak. We still have room, like I said, to continue higher to 2,400. Okay, guys, this is live analysis. This is something that you can look at the market, moving forward. Okay, moving forward. So the analysis is going to be valid for tonight and for tomorrow. Okay. So we can expect follow through into the 2100 as long as this support level that was formed here at 2377 holds. We do have room to run higher into the 2387 for those of you that are looking for a long position to hold overnight for a day trade. This is the way to go. This is your stop, 2377. This is your entry. If you're getting a pullback into 2380, this is your entry. 2380 is your entry. Your first target is going to be 2385. Your next target is going to be 2390. 95 is going to be your next target. And then you have a tradable void all the way to 2400. See how easy it is? And trust me, guys, it's not complicated. Let's take a look at the E-mini Dow. Okay. We're going to run a little late tonight. All right, E-mini Dow stabilizing, price stabilizing right here at 20,880. This is one of those numbers that I've mentioned, precise price point that I'm looking at, okay? The trigger came in at 20,900. This is your entry, 20,900. This is your stop, 20,880. Okay, this is your stop, guys. Your target is going to be 20,950. You can write these down, or better yet, you're going to receive the recording, and you can see we put our money where our mouth is. Okay, we put our money where our mouth is. Okay, and then guess what the next target is going to be? 21,000. That's the next target. Now, I'm not going to say that it's going to happen overnight. Okay, but it can happen. In one shot, in one trading session. We saw that is possible, okay? Or it can happen in 2 or 3 trading sessions. Would you enter tonight to get in early or tomorrow after the market opens? TG, great question, okay? If the setup is happening right now, I would even enter right now, okay? Because this is the trigger right now, 20,900, and the stop is right here, okay? If you wait for tomorrow, I will be sending out a recording. Stay tuned. I'll send you guys the recording. Make sure you're on my Twitter feed. Ricky, if you can post it here, it's twitter.com/Anka Metcalf. I will post it tomorrow morning for all of you guys that are in here. Okay, watch my video. I'm gonna pinpoint you to the right entries, to the right stops for the New York session tomorrow. Okay, watch my video tomorrow for those of you that want to trade the open. All right, so these are the targets right here. Like I've mentioned, 21,000. This is the ultimate target for, let's say, for tonight into tomorrow. If you should have traction, if let's say tomorrow morning we're going to get some amazing numbers, okay, some amazing numbers, and okay, don't forget one of the things that I wanted to mention in here. Hold on just a second. All right, guys, a game changer tonight. Don't forget, tonight we have the Bank of Japan policy rate. We also have the monetary policy statement and the BOJ press conference that is going to come in tonight, probably around midnight, 11 o'clock or midnight. This is a big, big mover for the currency market, and therefore the dollar is going to move. As the dollar is going to move, our future indices are going to move, okay? So this is going to be decisive on whether the market is going to continue higher or it's going to reverse, okay? So remember, overnight traders, pay attention to, so far there is a tentative a time aspect into this news. Also, at 4:30 a.m. Eastern Time, guys, for those of you that are trading the London Open, we have the Swissy monetary policy assessment that is coming in at 4:30, and you also have the official rate, the monetary policy summit, and the official bank rate at 8 a.m. Eastern Time. So that is a big one of the things that was a question in here. Why don't I trade at 8:30 a.m. Eastern Time? This is one of the reasons why. Okay, because you have this big chunk of news, and also at 8:30 a.m. Eastern Time, you have building permits, you have unemployment claims, big numbers, guys, that can influence the open. So we're in the clear right now to trade this. Let's say YM until these numbers hit. Okay, David, Aussie employment change in employment rate. Exactly. Exactly. Let's not forget about that. That's tonight. Employment change, unemployment rate coming in at 8:30. Thanks, David. Exactly. So you guys need to correlate the economic releases with your charts, because if you trade just the chart, guess what? You're going to find yourself that you get into a trade. Let's say you find the perfect setup, a base, a range, or something really appealing where you don't see a lot of price action. You have a very tiny stop. Guess what happened? You load up, you position size for that, and guess what? Boom, 8:30. You have unemployment claims that come in. You have a perfect setup to go long. Unemployment claims come in. The market interprets them as being negative for the market, and you're getting slammed down. Boom, one bullet down. Okay, so you stop out of the trade. Okay, you stop out of the trade. Why? Because you picked the trade at the wrong time of the day. All right, let's take a look at NASDAQ. Okay, NASDAQ was one of my favorite picks today. So NASDAQ pulled back right into an area of support. It was at 53.80 this morning, and it came back up. It was actually one of the indices that had relative strength compared to all the other markets. The S&P 500 and Russell were two of the strongest indices throughout the day today, and Nasdaq and mini Dow were lagging a little bit, so they were not as potent as the other two leaders. All right, so we had a blast. We have established a new all-time high, 54.31. You can see very easily that we did not have an all-time high in we did not have an all-time high in S&P. We did not have an all-time high in mini Dow, right? We didn't. But yeah, we had a new high in Nasdaq. NASDAQ is poised to continue higher and has a target of 54.85 to it. All right, so right now price is stabilizing, support 54.12, a trigger above 54.20 can unleash more buyers to jump in and take the price higher, like I've mentioned before, huge profit, huge targets for E-mini Dow. So no shorting for me. Okay, no shorting for me. If you're an overnight trader, and if you're in Australia, definitely you're going to be watching these numbers as they roll. The BOJ policy rate. You're going to be watching. The pound, obviously, at 8 o'clock in the morning. So again, you're going to adjust your trading according to those economic releases as well. So don't initiate, guys, don't initiate trades ahead of economic releases. That's just going to kill you. Have some kind of discipline in your trading and add that to your trading plan, and you're going to see how easy it is, okay, to respect your plan. Chris, what about take a look at the Russell? All right, let's take a look at the Russell. So Russell, actually, I do like Russell. What I want to show you in Russell is, first of all, the daily chart. Russell has been consolidating since December 9th. It was one of the choppiest charts that you can see out there. Where we have support that was set here, and we had pretty much resistance that was set here. Since this happened, the break, you can see my arrow here. So the price broke above this prior resistance high for the first time. So we had the Dow, we had the Dow, we had the S&P 500, we had NASDAQ that were creating all-time highs, and the Russell was lagging. Was the only mini that was lagging, and that was very, very bad, right? It was very bad for price action. So what happened, it did have a little bit of traction, and then it pulled back and it stabilized. You can see this shelf of support right here. So it has established the shelf of support in the upper area of this resistance area. So what this did for the chart pattern, created resistance, created another shelf of support for possibly a launch pad for price higher. But what happened? No follow through. Back to the base, formed a new support level, 1350, one of our favorite price levels. And then it's now continuing higher and is trying to challenge this prior resistance area. Now, this is going to be the line in the sand, Chris. Okay. Ron, we're going to take a look at oil as well. Okay, Chris, here's the thing. If we break above this number right here, about 1390, and if I'm not mistaken, it's 1394. Okay, we're poised to continue higher, and we're going to break above 1400 and challenge this 1416 area. If we break above this 1416 area, we're heading higher. The big line in the sand is going to come here because it has been the weakest one. This is going to make it or break it. This 1394 area is going to make it or break it. If we find resistance at this level, and if the buyers are not going to power up, and if they're not going to go higher and just pierce through this resistance area, the price is going to go back down, and it's going to remain in this choppy environment for a longer period of time. So for that matter, Chris, I don't want you trading Russell because there are other things that are better out there. And when you select what to trade, you need to look at the relative strength and relative weakness. One of the most relative strength indices right now is NASDAQ. Focus your attention on NASDAQ. You look at percentage-wise gain, you look at chart pattern-wise, and you assess and you see what is it better to trade. You want to trade something in a powerful market that provides you good numbers and good fundamentals and good strong economy. It's gonna propel the price higher, and that's gonna go faster, higher than something that is weak. If the market should turn around, Chris, if let's say we're going to get a dip in the market, if the market should reverse tomorrow, should reverse let's say on Friday, because we have some on Friday we have University of Michigan consumer sentiment, and we also have, what else do we have? CB lending index, and we also have that G20 meeting that is actually day one on Friday. And if the market should reverse, remember geopolitical context is very important for trading. Okay, and if the market should reverse, guess what, guys? Yes, we're going to start trading Russell to the short side, okay, because it's one of the weakest. It's one of the weakest. It's one of the lagging E-minis, and the lagging weakest. It's one of the weakest. It's one of the lagging E-minis, and the lagging E-mini has off to go lower faster than stronger indices. Okay. Uh, Dominic, they don't have a price yet, but I think it'll be $100. Yeah, okay. Interesting that you get TF according to TDA. Okay. Dominic, I do get Russell, and I can trade Russell off the Thinkorswim platform. They don't carry the quotes for simulated accounts for their paper trading accounts. They are going to charge for a series of indices like Russell, the dollar index, the coffee, natural gas, et cetera, et cetera. And I think that the fee is going to be $109 per month in order for you to trade these indices. However, remember that this is a free platform. You pay a little bit more on commission. I pay about $2 in, $2 out per contract. But keep in mind that it's great to have the ability to trade the Russell. I mean, it gives you a global image of what the market is doing. Basically, you have the Russell, you have the mini Dow, and all the others. So in my opinion, it's worth it to pay the $109. There's nothing official yet. I've talked to them yesterday, and there's going to be an email that is going to go out. They said that in a couple of weeks, making that specific announcement. Okay, so now let's take a look at CL. Okay, because like I promised, okay, let's do a thorough analysis on everything. All right, CL right now trading at $49.11, and I am in a trade. I am in this trade long. Okay, I am in this trade long, and I am into a swing trade actually, and we called it in the signal service. David Russell going back to the CME in June. Okay, so I'm just reading for you guys whatever comments are made here in the room, so you can keep up to pace of whatever's going on. Okay, so this is a really good setup that is happening here into gold. Gold had a decline of 1, 2, 3, 4, 5, 6 trading sessions. The price has stabilized at $47. And it is into an area of minor support here, $47. The alternate level of support was at $46.80, and this is actually, it was looking for a pullback into this area and a reversal. You can see here that it's breaching this 200 moving average and is trying to cradle the price and actually push it higher. Okay. And we're trying to did I say gold? I said oil, guys. This is oil. Okay. Oil. CL. This is CL. All right. So the price is poised to continue higher, and it has profit target levels. I'm going to share with you my profit target levels. Okay. Okay. Did I say gold, Ricky? Okay. I must be getting tired. Okay, guys. This is oil. Oil. Crude oil. Okay. All right, so profit target, guys, $50. I'm looking for the price to get $50. All right, you want to know my entry? You can type it in the room. You don't need to private message me. Okay, type it in the room. Okay, my entry is $48.80, and I have a stop level at under $48.20, around that area. Okay. Oh, we would just have we would just go to the bank, get a loan. Okay. Buy some gold. All right. So profit target on oil is $50, and it has room to continue all the way back into the 52 and back into the $54 area. Okay. Any specifics that you need to know on oil? Any other? Okay. Oil. I'm changing to gold now, guys. Gold. GOLD. GC. Okay. We have stabilized here. If you guys are subscribed to my YouTube channel. Okay. If you're subscribed to my YouTube channel, we've talked a lot about gold. We talked about the fact that we see gold stabilizing at 1200, and we see a buy opportunity for a swing at 1200 with a target level into 1221. Second target level into 1230, 1240, and back into the 1260 level. So fees. This is the swing portion target. The gold remains, guys, gold remains uptrending right now. Okay. So gold remains uptrending right now. Thank you, Tina. Black gold. There you go. Yeah, guys, I was talking about black gold, okay, earlier. Okay, so we're still into a very strong uptrend. Why? Because this prior low has never challenged the prior low and the prior low that was established earlier in December. So we're still trying to reverse the trend. This may be another buy opportunity for a continuation higher. Once the price gets into the 1260 area, any pullback should be bought for potential swings to the upside. All right. Okay, so now we're going to go back to our presentation. Lots to talk about here. Okay, so when we perform now the top-down analysis, so we know exactly where these indices and where they're prone to continuing, whether higher or lower, right? So how do you select your trade? What to trade, guys? What to trade? Earlier, I mentioned that I'm going to share with you my watch list. All right, here it is, guys. Here's my watch list. Okay, my big watch list. Guess what? Only 9 charts. Only 9 charts, guys. Only 9 charts. If you're trading a small account, then obviously you're not going to be trading gold. You're not going to be trading silver. But pretty much you're going to be trading everything else. You know, you're going to be trading mini Dow, S&P 500, NASDAQ. You're going to be trading black gold. Okay. You're going to be trading Russell bonds and the dollar index. Right? You don't want to pay the fees, okay? You don't want to pay the fees. Then guess what? You're going to eliminate gold, silver, you're going to eliminate Russell, and you're going to eliminate the dollar index. So guess what, guys? You're going to be left with 5 charts to watch. Even better, more focus. Lesser charts, more focus, okay? This is my whole watch list for the day. How can I miss a trade when I'm only watching these charts? I don't use a scanner. I don't use to scan through stocks. I don't need to do any sophisticated homework. I just use these charts. Okay, so all in all, what I want to say is that what to trade. Okay, first of all, what to trade. I pick the best trade of the day by looking at the internals and look at the chart to see which symbol is stronger and which symbol is weaker. I trade the strongest for the upside and the weakest for the downside. Okay. How many charts are you watching? Guys, how many charts are you watching? Like I've mentioned before, I'm only watching 9 charts. How do I pick my trades? Based on relative strength and relative weakness. And I also read inside the market conditions. Reading market conditions is very important. And we went through some market conditions and some influencers that can be catalysts for our moves moving forward. What we do, and then zoom in. Zoom in either on a 2-minute chart or the 1-minute chart or a time frame that will offer us a better entry, because remember, it is not the entry and the time frame that you trade is not set on stone. You have to be flexible. There is no thing as saying you only have to trade the 2-minute chart. That's not real. You have to trade the chart that tells you what you need to do, where you see your entry, where you see your stop. And if you have been trading for a while, you know what I mean, okay? Decide parameters for the trade. Determine your support resistance, remember, on the hourly chart, and transfer them to the minor time frame chart. Translate them on the minor time frame chart, because they're going to give you the parameters for that specific day. Whether you're going to buy the bottom, because that bottom may be a support on the hourly chart, and you better know that support levels on the hourly chart and very strong trends are being bought. So every single time when you get in a trade, ask yourself, where is price in relation to my support resistance areas? And what's my directional bias? And that's going to keep you on the right side of the trade. So we're zooming in on all the time frames. You can see that this is a trade that is developed a little bit later in the day. It's a 15-minute chart. Okay, and then silver, you can see that I'm using a 2-minute chart. Once again, it's later in the day. It's trading in extended hours right now. We were in this trade from earlier. We were fading the move. Okay, this is something that we teach in our class. Fading the morning move throughout lunchtime. You could see it right here with one contract. If you have a little larger account, if you have, let's say, a $10,000 account, that you can trade one contract of silver. And you can see here with one contract, $555 in one day. So how to read the market conditions? Well, I just share with you how you need to look at the market as a global environment. You're trading the futures market. You're not just trading the New York session open. You have to know what's happening in the market overall in order to understand the market conditions. You don't understand it, then you're not able to trade. Remember, the chart is only offering you about 60 to 70% of the information. The other part of the information comes from fundamentals, okay? The best setup that happens, guess what, guys? We don't have setups. We don't trade setups. What we trade is we trade based on precise trigger times and precise areas where we buy or short specific equities or commodities. Our strategy is based on precise trigger times and price zones, and that keeps us in the focus. We have exact time. So when the market opens, we know that we have a trigger time that happens at 9:30 a.m. We have another one at 9:45 a.m. We have another one that happens throughout the day, 10 o'clock, let's say 10:15, 11:45, etc. Okay. TOL strategy. We have one strategy that we apply at a precise location, at a precise time. Focus only 2 hours. Even if you're in Australia or Singapore or wherever you may be in the world, South Africa, guys, you only need to pick 2 hours. You don't need to pick the New York Open, okay? You don't need to pick that session open. You can pick the London, or you can pick the London Open, or you can pick, but careful, if you place a trade ahead of the open, okay, if you place a trade for what time, for what locations the rear, if you trade ahead, if you place the trade ahead of the New York session open, guys, oh my gosh, you have a lot of odds of stopping out, because if you take a trade, let's say at 9:25, the fleecing that happens at the New York session open or at the London Open, it's going to take your stop out, okay? Just wait up, okay? A few more minutes, okay? Trading focus. Focus is your entry, your stop, your target in order to be successful. Other than that, you find yourself chasing the trade or selling where you should be buying and the other way around. Let's talk a little bit about the strategy. I told you that I'm going to share a little bit about the strategy. The entry strategy is the most important part of the trade. This is the one time, and one time alone, when your trading capital is at risk. Once your trade triggers and it goes in your favor, you can then relax, manage your stops, and wait for a graceful exit. The entry is based on chart patterns and you have identified and that match your trading criteria. Okay, the stop is a pre-planned exit. The stop strategy is the second most important part of the trade. This element defines your risk and determines your position size. Once the stop triggers, you're stopped out of the trade and you have lost your risk amount allocated for your trade. And that risk, guys, is your risk tolerance. We're going to talk about that in a few seconds. The target is the price that, if achieved, would result in a trader's recognizing the best possible outcome for his or her trade. Position sizing. Guys, I know that there are a lot of you in here that do not position size. It is very important for you to position size for your trade according to your risk tolerance. Now, everybody's different because everybody has a different account size. Let's say a trader that has an account size of, let's say, $20,000 can risk, let's say, $500 per trade. But that $500 per trade is his risk tolerance, okay? Now, when you take a trade, you better make sure you position size for that risk tolerance. You're not going to take one contract and trade one contract, or you're not going to standardize your trading as to saying, it's like, okay, today I'm going to trade with one contract, and in a month from now I'm going to be trading with 2 contracts. 10 years from now I'm going to be trading with 15 contracts. That's not the way to do it. Simple. Take it from me. I have been trading for a very long time, have been trading institutionally, and that's not how it's done. And I find that a lot of traders are not respecting this. For example, you want to trade YM. I just gave you an example for a long position. If that trade, let's say, had a 20-point stop, which it did, right? We talked about the parameters. That means that if you were to trade that, if you were to take that trade with one contract, you would have $100 risk per contract. If you have a $20,000 account and your risk tolerance is $500 per trade, guys, per trade, and you allow yourself at least 2 to 3 trades a day. So if your risk tolerance is $500 per trade, you are going to take that trade with 5 contracts. No questions asked. You're not going to say, yeah, but it's an overnight trade and I'm not going to risk as much. No, you either take it or don't take it. Okay, you either take it or don't take it. I don't have time today to talk to you why that is important, but trust me, take my word for that. What is risk? Risk is the difference between your entry and your stop. Okay, between your entry and your stop. The risk will define your position size. Okay, the risk will define your position size because I'm using the same example. If YM has a 20-point risk, that is $100 per contract. Guess what? If you have a small account, if you have a $5,000 account, okay, if you have a $5,000 account, Gibson, we can talk about that when we talk on the phone tomorrow morning. Okay, if YM has a risk of 20 points per contract and if you have a small account of $5,000, it's okay for you to take that trade with $100. If you have a small account of $5,000, if you know what you're doing, if you learn our method and trade with me, okay, you can make a lot of money. But you need to make sure that you allocate your position size for that, and you can take that $100 trade. Okay, in fact, you can take a $150 risk. You can even take a $200 risk for the trade. Okay, trading is easy, guys, if you know what to do. It's actually fun. I look forward to it every single morning when I get up. I look forward to it every Sunday night when the market opens. Sunday night, 6 p.m. Eastern time, guess what I'm doing? Regardless of whether I'm I'm visiting, or if I'm at the movies or a restaurant or with my friends or with my family or etc., I go to my cell phone and check it out if I'm not home. If I'm home, I have my computer up to see the first ticks of the market, to see how's the market doing. Where's the market opening? Okay. Risk to reward ratio. Okay. So 2 to 1, 3 to 1, depending on the market conditions. So for example, if you have YM runs and reaches targets, that can offer you a 2 to 1 reward, $1,000, 3 to 1 reward, $1,500 on the initial risk of $500. Because if I'm risking $500 on a trade, I'm not looking to get $200 out of the trade. I'm looking to get two reward units or more. I'm using to attain at least 2 to 3 times my risk level. How to select the trade of the day. And we talked about this. We're looking for relative strength and relative weakness. We're looking for trend and for precise location. Okay. How to plan and execute your trade. First, we talked about analyze your charts, pick your entry, select your stop, determine your targets, position size, enter your limit order. We never get in aggressively at market. Never. Like buy now or sell now. No, our trades are delivered 5 to 2 minutes before they trigger. Wait to get filled, place your stop, and you can even place your target 1. If you're using multiple contracts, we advise you take a portion of your profits at target 1, and then we have a plan for the rest of the trades, for the remainder of the contracts. We have a plan. We know what to do, so we don't go in the red. And then once everything is all set, guess what, guys? Your trade is set on autopilot. Okay? We select our trades and place our orders before they start to move. And we strike at precise times. Here's a set of trading rules that are very, very important, and I want you to take note of this. Number 1, never fight the market. Never go against the trend. Timing is everything, especially when it comes to market timing. Wait until the market trend is clear, either rising or declining, before buying or shorting E-minis or commodities. Number two, never catch a falling knife. Once the E-mini or commodity that you're trading picks a direction, try to capitalize on the move. You do not know what kind of trading day tomorrow might offer. So you have to capitalize on what that trading day is offering you that day. Because guess what, guys? Maybe on Friday, being option expiration, I'm not going to take any trades. And if I'm going to have a good trading day tomorrow, you bet I'm going to capitalize on the move. And if I have a trending day, oh, I'm going to sit in front of the computer and I'm not going to trade only 2 hours. I'm going to trade for the rest of the day, because you don't know what the next day might bring you. Okay? Basically, you're trying to squeeze out every penny from the current move. Never buy an E-mini or a commodity without a stop loss in mind. Your capital needs a safety net, and the most rational time to set that line in the sand is before getting into the trade. You have to determine your stops, yes, ahead of getting into the trade. If you do not have a stop, your emotions will get the best of you. All right? Not good. Not good. Never go beyond your risk level. Never go beyond. So if your risk level, let's say, is of, I don't know, $150, or let's round it up and say $200 a day. And if you look at an E-mini or a commodity and say, oh, that has a stop of $275, you don't take the trade. You skip it. You don't take the trade. You skip it, because you're not going to adjust and squeeze your stop to accommodate your stop loss if your stop is different than your monetary stop. Okay? Peter, do you take profit just about reaching the target, let's say $800 instead of? Yes, I trail it. There's nothing wrong with banking 800 bucks. Absolutely, Peter. If I have a target, okay? I actually had a trade today. I had target 1, 2, 3. Okay? It reached my target 1. I was in capital preservation mode, and I was protecting my capital. Once you're in the green, you got to protect your green as if it's your life, as if your life depends on that, because your life depends on that. Because guess what? That's your money. Okay? If you don't make money, you have no way of paying your bills. So you better protect that capital. You better think of that. Okay? So yes, I'm taking my 100 bucks. If I'm trailing, yes, I'm taking my 100 bucks. Okay? So using the 1% rule means you will modify your stop loss or your position size so that no single E-mini or commodity position should cause catastrophic damage. Never let a winner turn into a loser. Many times, how many times have you had a nice gain just to give it all back? Just to give it all back, okay? Just to let it slip away rather than sell. 50% of the time, the 50% rule can help, okay? What is the 50% rule? Once your E-mini commodity, whatever you're trading, stock, ETF, etc. Once it reaches your target 1, the best thing to do, if you're a multiple contract player, if you're playing with larger size, you're going to sell half at target 1. That's the 50% rule. Shahid, hi Shahid, nice to see you in here. LOD means low of the day, HOD means high of the day. You have the whole entire list. I send it to you in the welcome email. Okay, learn our strategy in 30 days or less. Become a better trader in 30 days. In 30 days, yeah, that's right. It's really possible for you to start making money after 30 days. Our comprehensive trading course will teach you everything you need to know to become a successful trader in today's market. We have a course that is coming up, and it's coming up on Monday, super fast, where we're going to teach you all the strategies, all our proprietary strategies. What we've talked about tonight is only like, I don't know, maybe 1% or 0.5% of what you're going to be learning in the class. Remember, you're going to be learning institutional methods. You're not going to be learning like the retail methods like the big box trading companies are teaching you, where you have those multiple stop outs, okay? So live class, guys, we have a 10-day class, course book, on-demand recording, unlimited access to the recording, unlimited access every single month to our live class. 30 days, you're going to get to trade with me, trading plans, daily market videos, anything that is going to help you to put you on the right side of the trade, and a limited support throughout your learning process. Because guess what? After the class, we don't close the door. You have an open relationship with us forever. We're going to teach you our proven strategies, when to buy, the precise time, the areas, and the prices, where to place your stops so you don't get stopped out as often, what index or commodity to trade or to swing trade based on our proprietary system, advanced risk and money management, trailing techniques, guys, trailing techniques, so you can actually keep a lot of money and have the potential to let your e-mini or commodity run to targets. Okay, advanced technical analysis, like I said, we have a huge chapter. Okay, advanced technical analysis, like I said, we have a huge chapter. It's going to be covered actually in 3 days. That's how big it is. And much, much more. And for those of you that are interested, feel free to email me at info@tradeoutloud.com for class curriculum. If you're interested in hearing more about the class, more about of what we will be offering for you. Not only that, but the class is, this class has a special bonus built into it. We're not offering the trading lab anymore. However, this month we're offering the trading lab. And guess what, guys? We are not charging for the trading lab. $3,000, $29.95 savings for tonight's, for next week's class. So the class starts on Monday on the 20th and it ends on the 31st. 10 days. It's like a boot camp for trading. Monday to Friday from 5 p.m. to 7 p.m. Eastern Time, we have the educational seminar for 5 days. And then for the next 5 days, Monday to Friday from 9 o'clock to 11 o'clock Eastern Time, you're going to be trading with me. I'm going to be sharing charts. We're going to be trading live. I'm going to walk you through my thought process, how I analyze, so it becomes a stereotype for you. So come next Monday after the class, you're going to know exactly what to do. But guess what? It doesn't stop here. I'm going to be holding your hand for the next 30 days. So yeah, not only the 10 days, but you're getting another 30 days. So it's basically like 40 days with me. Okay, I'm going to be holding your hand, walk you through your first trade, walk you through your first profitable trade, and then you can go and you can start making money. Okay, you could go start making money. You have the option of following me again throughout throughout your trading career. I'm trading for, I'm like I said, I am a professional trader. I trade for a living. We only host this class one time a week. That's one time a month, not a week. Okay. Do you offer a DVD or a video to learn on? We don't offer DVD. We don't believe in DVDs or videos. We offer in live environment. And not only that, Egreen, but you will have all our recordings from the class. Unlimited access forever. Okay, forever. This webinar is being recorded. You can watch the archive link. We're going to be sending out the link a little bit later on. So don't forget, if you want to sign up for the class is filling up fast. It's very, very popular. We don't have large classes because we want to give our undivided attention to each and every single student. So remember, the class starts this Monday and it runs from March 20th to March 31st. The class tuition is $49.95. And if you want to sign up for the class, you have the information here. Send me an email to info@tradeoutloud.com. More than happy to talk to you for about 15 to 20 minutes about your trading goals, where you're at right now in your trading, and how this class can help you. We can talk about the class curriculum and much more. You will have access to a link. We will be sharing with you an active link for the class, and hope that would be okay for you. You can watch it on any device. All right, I'm open for questions, guys. I'm here for another 10 minutes. Let me know if you have any questions. I'm happy to answer everything for you. Yes, we can schedule the phone conversation tomorrow morning or tomorrow afternoon. Lewis, what platform do you utilize? I use what platform can you utilize? You can use anything. You can use TradeStation, you can use Ninja. A lot of my traders are using Ninja. I have some traders that are using TradeStation, Infinity Futures, TD Ameritrade, Thinkorswim, lots of trading platforms, lots of options out there. I don't have Greg. I don't have a trading room. However, we do have a signal service. You could visit our website. It is tradeoutloud.com. Rick, if you can post it here. It is tradeoutloud.com. I think it's /futures alert. You can learn more about that. What do you have to show a track record? What do you have to show as a track record in your method, say for 2016 year return as a percentage? You know what? Results speak from themselves. You can email me. I'll send you the track record. TG, the price is $4,995. We are waiving $2,995 for the trading lab. The trading lab is priced at $2,995. 5 days you get to trade with me live. And we are waiving just this month. We're not going to do it next month, guys. And I don't think we're going to do it for the rest of the year, to be very honest. It takes a lot of effort to do it. Okay. For example, if you place 500 trades in 2000, what percentage were win? Should be an email, Egri. You mean the batting average? E-green batting average? We have a batting average of about 75 to 80%. So that means that we can take a trade and we can only take the trade to our first target area and we make a killing in the market. Never mind other targets. Okay, the link is not working. Let me see. All trades, E-green. Okay, let me know, guys, if this link is working. Okay, this link should be working. All right. All right, any questions? Oops, now I messed up I can't see it anymore. Okay, I don't know how to close this. Okay. Oh, Ricky, I can't see, my screen is just blank right now. I can't see the questions. Ricky, if you can please get on the mic if there are any questions, let me know. If you could read the questions to me, I'd really appreciate that right now. Okay, are there any other questions? Guys, my one of my monitors where I have the webinar room just froze and I can't see your questions. Ricky, if you could get on can't see it anymore. If you could get on the mic and read me the questions. Hello? All right, guys, if you have any questions, please, I don't know, Ricky might have some technical issues. Let me know if you have any questions. Email them to info@tradeoutloud.com. Thank you so much for joining me here tonight. Sorry about my issues with webinar with this webinar room right now. It's frozen. I can't see your questions. Please shoot me an email, info@tradeoutloud.com, with any questions you may have. And thanks so much for joining, and have a really nice evening tonight. Thanks so much, guys. Have a good night. Bye-bye.